Is it your sense that we are getting closer to a trade deal, and are you starting to position for that eventuality?
Well, frankly speaking, we don't really that closely following the deal that much as President Trump might expect now, because we think that we have been 15 months already in this trade conflict, and also the investors have already taken it in that worst case scenario might happen. And then I think the whole country is adjusting ourselves, the economy and also people's mentality are trying to adjust to ourselves. The future is going to be harder, but we need to try harder.
So adjusting for longer-term tensions with the U.S. So if we were to get an interim deal, which some people think may happen by the end of October, does that change your investment positioning?
I think we are trying to invest for the long run. So in the short run, definitely, I think the negotiation on trade conflicts will affect the short-term performance, at the same time the market mentality, but we are positioning for the long run. So we are more focused on the long-term prospectus and also at the same time the investment opportunities.
What parts of the economy in China are looking most vulnerable to you now, beyond manufacturing and exports? What is looking most concerning?
I think definitely there will be very concerned forecast in technology sector as well. But at the same time, I think there's where opportunities lie as well.
Do you think, I mean, we've heard from the PBOC Governor Yi Gang recently suggesting that it doesn't have a big appetite for further rate cuts, or at least significant rate cuts in QE. That's what he said. Does that put a cap, do you think, on AShares this year?
Well, on AShares, I think not only the liquidity side from PBOC, I think also the mentality and the forecast of the trade negotiation will definitely have some kind of shadowing effect on the AShares this year. So in general, we do not expect the main board to have very significant rise or even drop in the short term. But I think sectors are going to be very interesting. So
you think 2019 AShares end at about the level that they're at now? Not much more upside for AShares?
Not much upside, at the same time, not much really job potentials as well.
Okay, I know you're in the business of longer term investing as well, so give us some of your top picks in terms of sectors.
Oh, great. I love that topic. I think the first one, it's always consumer. For Chinese market this year, if you are paying attention, I think the consumer sector, our ETFs have jumped more than 50% already. So consumption upgrade is going to be the main theme of the whole economy in the next 5 or 10 years. Is there still an
opportunity, though, to get into the consumer sector, given that the sub-index is up 33% so far year to date? It seems, to some, overvalued. Do you buy on the dips? How do you get in there?
I think, well, there will be a lot of the restructuring of the whole industry, because we feel like the brand names recognition will play an important role in the future for consumer consumption. So that in that case, in the long run, if now it seems a little bit overvalued, which we admit it probably can be overheated, but in the short run, we still think they have very absolute advantage in the development.
Tell us about healthcare, because we saw some of the domestic stocks sell off on the back of some regulatory changes, some pricing changes this week. Is that an opportunity to buy the dip, or is that change around generic pricing going to drag on healthcare stocks going forward?
We do believe there will be some strategic opportunities actually for our investors. Actually, we are launching one healthcare product next week. So we are going to push our healthcare investments to our investors to gain from the long-term population aging effect in China.
Is that an ETF? Because I know you think there's opportunities around ETF development in China. What kind of changes have we seen in the ETF space here? Indexing, of course, has been hugely significant in the US and elsewhere. Is it starting to take hold in China? And how much is that changing the investment landscape?
Sure. Well, that fund will not be an ETF. It's going to be an actively managed product, but ETF trend has been very tremendous in the past year, and I think it's more because we have more internationalized clients and at the same time more institutionalized clients, and I think ETF is not only about passive investments. China AMC is the leading provider of ETF product. We account for 30% of the whole ETF market in China, but we believe fundamentals still matters, so we actually launched several smart beta products this year and well received by our our investors. So ETF will be a crucial asset allocator in the future for Chinese market.
I have to ask you a broader question now about the private sector and the state sector, because there's constant questions about how much of a role the state is playing in trying to open things up for the private sector or not. And we've seen recently some reports around officials in Hangzhou, Communist Party officials, being placed in companies like Alibaba and GD. Do you see that? Is that a concern, do you think, for investors, or is that just a way of easing communication between the state and the private sector?
Well, I'm always optimistic. So I think it's probably a good sign in one that you are saying easing the possible tension or concerns of some people. At the same time, I think the state is trying all their ways to try to support the private sector, and sending someone, well, not sending someone, but putting someone in a better communication position probably will be a way they're trying to help the private sector to be more in line with whatever objects they have and to communicate better with the state or the agencies.
Yimei